All right, good morning, everyone. Let's kick it off. Okay. Friday session in the States was a bit more choppy than normal, but still the range was incredibly small. You can see there we really bombed out in the last half an hour, which is, I think, not a great finish. But I was kind of surprised that the markets held on as well as they did. We had Janet Yellen, which was speaking on Friday, came out and said that it's likely that the Fed will raise interest rates before the end of the year, which, before she was speaking, there was almost zero probability in terms of the Fed funds futures that they were going to raise in 2015. Now that she's kind of pulled that forward, I'm a little bit surprised that the markets held on as well as they did. That being said, it was a super light day in markets, not many people around, not many people, a lot of people leaving early in the States, for instance, for a long weekend on Labor Day holiday, which is today, which is why U.S. markets are closed. Sorry, not Labor Day, Memorial Day. And then also markets closed in the U.K. today. So I think everywhere, just super low volume today. Do not expect to to see any significant volume anywhere unless there's some sort of major news, simply because there just will be there'll be almost no one from the international space involved in our market today. We saw the dollar, which has powered ahead over the last few sessions. We're back below 110 against the euro. That's obviously been brought on a little bit by the CPI numbers that we saw on Friday, which were a little bit hotter than expected, although mildly, and then also because of Janet Yellen's comments. So very quickly we go from one side of the boat to the other again. All right, if we move into the Asian session, some of the markets were closed there. So the Hang Seng was closed, I believe, and I thought one of the other ones was closed, but maybe not. Shanghai, solid night, highest level trading since 2008. Excuse me. Australia's market traded well. You saw mining stocks bouncing up a little bit, with 3% jump in iron ore prices, giving them a little bit of a bounce off of the floor. And the Nikkei rallying, I think, simply because the yen is breaking down, not breaking down, but it's getting very close to breaking down to the lowest levels in several years. All right, corporate action today. We had Tonga that came out with earnings today. Headline earnings per share at 8.26. That was dead in line with what guidance was, which is obviously a lot lower than expectations. We had revenue that came in a little bit soft, and divvy per share obviously a bit soft as well. And we had Rhodes Food Group as well. Those are half-year numbers, so I don't think you can really look at them comparatively. And then we've got Illovo Sugar, which also came in maybe a touch better than guidance, excuse me, but missing on expectations. In line on the revenue side, and a bit of a miss in the divvy. I'm going to stick my head under the fountain here. All right, key factors out today. The only thing we've got is the Japanese trade balance. Absolutely nothing else. Let's get into the maps. Sorry about that. I think I got a piece of muesli stuck in my throat. All right. Let's look at U.S. dollar. Yen. Like I was talking about a second ago, this is taking the Japanese market further forward today. You can see here really stretching its legs a little bit and coming back up and really looking like it's ready to make a breakout. Next one we'll look at is the Aussie future. So it's been about, let's see, at least 2 weeks since we've had anything interesting happen in the futures market, or in our market just in general, I think. You can see there, 48,000, 1, 2, 3, 4, 5, 6 touches off of 48,000. Wouldn't be surprised if we touch it today. just for good measure. Also wouldn't be surprised if we squeeze to death, because that's usually what happens in thin markets, which we will be today with the U.S. and the U.K. closed. But 48,000 has really further cemented its importance in on our market as of recently, and I think, if we drop that, I would be very surprised if we don't come back down and test here. That being said, we could also make a breakout to the upside here and take out new highs if we start to break out of this this little descending triangle pattern. All right, look at Remgro. I'm going to back this out to a 2-year chart here, and you can see here we are, as of Friday, we tested right at trend support, right at the 200-day moving average. I'll zoom this forward, and you can see that we made a nice hold at that level. We traded below it intraday for a little bit, and then we reversed nicely into the close to close up close to the highs of the day. I think that these are obviously important levels for different reasons. What I'd really like to see is us get up above the some of these key levels, which are around 258 and 260. So on those closing highs right around in here. And then also where we bottomed out on these two pullbacks. So somewhere above 258 and 260, I think you really can add and maybe potentially have a real go on Remgro. And then let's look at clicks. So clicks, one that we obviously don't show very often, coming down and really testing what is quite major support on a bit of a head and shoulder pattern. I mean, I think you can actually, the way that you look, the best way to look at this, it hasn't necessarily quite broken out yet. It's kind of right there. So somewhere below maybe this level that we closed at on Friday. If we start to trade a little bit lower, I think that you can give us confirmation on the breakdown. Obviously, we want to see a close down there, but a little head and shoulder set up here. There's a nice target to the downside, probably taking us a little south of that 200-day moving average. And the last one we'll look at this morning is ARI, which you can see here as well, is coming back in to test support. And all of these mining stocks, you look at ARIs, you look at Exaros, all these things, they're really just they're battling big time. I mean, we might see a bit of a bounce up this morning on the back of higher on a bit of a bounce in the iron ore price, but I think unless we see something significant, some sort of shift in terms of the global outlook and expectations there, then these things are probably going to continue to stay under pressure. It's been such a dramatic shift for them. I think it's been hard for them to adjust. They weren't prepared for it. Financially, they didn't have the pieces in place that they were going to need to have all of a sudden to have this, this low price burden thrown on them. And so it's really going to get messy, I think, before they can start to bounce. And that's it for today, guys. Good luck out there.